From other analysis, Iraq's debt is a safer bet than numerous European countries. CMA Datavision provides independent data on the credit markets and just published a report on which countries are most likely to default on debt. Analyst Sebastian Meyer worked on the report. He is with us now on the phone. He is currently in India. Sebastian, thanks so much for joining us this morning. So a country still recovering from war, Iraq, has more stable debt products than Ireland's or Greece's. How do you measure the risk? What criteria?
We measure the risk in terms of the traded market premiums in the CDS market, and the reason that Iraq looks less risky is due to the fact that they have a very low amount of debt outstanding versus their GDP compared to countries like Ireland or Portugal, where the debt load is very high compared to GDP or the government revenues.
Even though a country
that is the main driver.
Even though a country such as Iraq, which arguably has to have a lot less liquidity, that's a less important factor than debt to GDP in your calculations.
True, that's right. And it's not that we calculate these premiums. They're actually observed in the market. So these are real observed CDS premiums as we see it trading in the market.
Sebastian, we saw bond auctions earlier today from Spain and Italy with pretty healthy demand, maybe higher yields than the countries got a year ago, but still strong demand. Portugal as well, we followed yesterday. Where do these three countries show on your list? Where is their probability of default?
The probability of default has gone up a lot in the last 3 months. So they are possibly around 20 to 30% for each of them, the probability of default. And what we have seen, there was a stabilizing element in the last 2 weeks. So we could clearly see there has been some intervention by the ECB and the officials and the central bank trying to stabilize the government debt markets for these countries. And so far that has worked out. We've seen 2 successful auctions for Portugal and Spain, and now it remains to be seen whether this can continue or the need for restructuring in these countries, not in terms of bond restructuring, but restructuring the government revenues and expenses. That is the key issue here.
We know as well that in addition to these countries, actually Greece shows up #1 on your list as far as possibility of default. But I see that Venezuela is #2, and we haven't been talking a lot about the Americas. Why is Venezuela almost at the same risk as Greece?
It's for Venezuela, there is always a high risk that they repudiate on their debt, and they have basically dropped comments all along the last months or years that they might not be willing to pay back, whereas in Greece, they're really standing hard by their commitments, but just if you look at the numbers, it's going to be very, very difficult for them to follow through and be able to serve their debt in the next couple of years.